Welcome to the deep dive. We cut through the noise to give you the essential insights, fast. Keeping up with tech and telecom, especially the financials, it can feel overwhelming. So many numbers. But getting the story behind those numbers, that's where the real understanding comes in. Today, we're doing a deep dive into Tejas Networks Ltd, specifically their unaudited financial results for the quarter ended June 30th, 2025. We're pulling directly from their official press release, the Q1 FY26 earnings call presentation, and the earnings call itself, all fresh from July 14th, 2025. Our goal here, extract the really important stuff, help you understand what's actually happening with this key player in India's telecom scene. We'll look at the numbers, sure, but also the strategies, the big picture stuff for Tejas and, the wider industry.
Exactly. It's crucial to remember these reports, they're often just a snapshot in time. The headline figures might show one thing, but connecting the dots, seeing the trends, the strategic moves, the long-term vision, that gives you the real context. We need to look beyond just the surface numbers.
Okay, let's open the books then. Q1 FY26, that's April 1st to June 30th, 2025. What are the headlines? Net revenue, INR 202. Now that's definitely lower than the last quarter, Q4 FY25, which was way up at 1,907 crore. A big difference. And profit after tax, PAT. Well, it's a loss. INR 194 crore. Deeper than the 72 crore loss in Q4. But interestingly, their order book at the end of the quarter was INR 1,241 crore. That's actually up from 1,019 crore in Q4. So yeah, bit of a mixed bag on the face of it.
Right, and it's really important to understand why that revenue and profit dip happened, according to management. It wasn't really about a lack of business. The main thing was timing. A big factor was the delayed receipt of PO and shipment of 18,000 sites of BSNL 4G network. They really expected that in Q1.
Ah, okay, so a delay, not a cancellation.
Precisely. There were also some delayed inventory arrival and shipment clearances for a few customers. Smaller issues, but they added up. But it's worth pointing out the revenue they did book, it came from key shipments to India private and international customers. So other parts of the business were moving.
Got it. So more about when the revenue hits the books rather than if. That's a key distinction. What about the mix? Where did the Q1 revenue actually come from, and what does the current order book look like?
Okay, so the revenue mix. India was dominant, 81%. International made up the other 19%. And when you look at the closing order book, India's share is even bigger, 92% India, just 8% international.
92% India in the order book. That's heavily weighted.
It is. And while that strong Indian order book is obviously significant, especially with projects like BSNL, it does raise that strategic question, doesn't it? How do they diversify? Is relying so much on domestic, especially one big project, a risk, given those Q1 delays? Or just a current strength?
That's a really good point. Which brings us squarely to BSNL, because, yeah, despite the Q1 dip, this huge opportunity is sitting there waiting. It could completely change the picture for the rest of the year. Tell us about this BSNL 4G expansion piece. Why is it so pivotal?
Right. So TCS, they're the system integrator partner for Tejas on the BSNL project. They received an advance purchase order, an APO. It's for an additional 18,685 sites for BSNL's 4G expansion.
Okay, and an APO. And what does that mean for Tejas in terms of value?
The expected value of the upcoming PO for Tejas is around Rs 1,526 crore. Specifically for supplying the RAN equipment, radio access network, gear antennas, base stations, the critical stuff connecting phones to the network.
1,526 crore, that's substantial.
It is. And crucially, this number, it's not in that 12,241 crore order book we mentioned earlier.
Right.
It's separate. Management said it's expected to be received shortly, and this is key, they expect it to be executed in this financial year.
Executed this financial year. Wow, okay, that is a potential game changer for their FY26 numbers, especially after the Q1 timing hit. And what about the BSNL rollout that's already happened, the first phase?
Yeah, over 90,000 sites are deployed and functioning. And they say the performance is satisfactory, though there's ongoing optimization, which is normal.
So, given those earlier delays, what are maybe the critical things Tejas needs to get right to make sure this huge new order actually converts smoothly into revenue this year? Any potential hiccups?
Well, getting those first 90,000 sites up is definitely a big plus. It proves the tech works at scale. This new order, it just highlights the massive scale of India's digital build-out, really. Success now comes down to execution. Efficient supply chains, managing inventory, deployment speed. They need to hit that aggressive timeline within this financial year, the main risk. Repeating those Q1 delays, whether it's inventory or clearances, you can bet they're focused on avoiding that.
Makes sense. Now, adding another layer, there were some news articles, weren't there? mentioning the union minister talking about potentially another 100,000 BSNL sites down the road. Did Tejas comment on that?
They did. Management basically said, yes, we've read about the article, and they feel they'd compete favorably if that opportunity comes up. But importantly, they have not received any intimation of the process yet. So it's out there as a possibility, a big one, but it's not something formalized or in the pipeline right now. Still speculative.
Okay, good clarification. So putting BSNL aside for a moment, which is hard because it's so big, what else was Tejas doing strategically in Q1? Any new partnerships, new tech directions?
Oh, definitely. They've been active. One really interesting one is a strategic partnership with Rakuten Symphony.
Rakuten, okay.
Yeah, the idea is to develop integrated 5G Open RAN solutions and drive global expansion. Open RAN, for anyone less familiar, it's about building mobile networks differently, more flexible, using parts from different vendors, software-defined, not just one big locked-in system. This partnership combines Rakuten's cloud platform, CUDO, with Tejas's radio units. It's a smart way to potentially get broader global reach.
Interesting. Open RAN is definitely a hot topic. What else?
Another big push is into D2M, direct to mobile. They've partnered with Intel to integrate Tejas's SL3000 D2M chipsets into laptops. And Lava and HMD India phone makers plan to launch D2M-enabled mobile phones using Tejas's SL3000 chipsets. That's a significant move towards consumer tech.
D2M. So broadcasting directly to devices without needing a traditional mobile network connection. That feels like a different direction for them.
It is. It leverages their core chip tech, but opens up a whole new market.
How tough will that be, though, moving into consumer devices? Different ball game, different competitors?
Absolutely a good question. It's a huge potential market, yes, but it means new strategies, different sales channels, going up against established chip players in that space. It definitely shows ambition, moving beyond just carrier infrastructure. They also landed an initial order for a private 5G deployment, and this is under BSNL's CNPN initiative Captive Non-Public Network.
Private 5G. Explain that quickly.
Sure. It's basically setting up a dedicated, localized 5G network just for one organization. Think like an industrial complex or a mine or a campus. Uses operator spectrum, but it's private, secure, high speed for their specific needs. Management called this a small order, but important. It's their first win here, a good reference for other potential private 5G deals in India and potentially globally. And finally, they mentioned their ongoing tech collaboration with NEC, expecting some increased capex there, but they hope to see some wins and project closures in this financial year from that partnership too.
Okay, so a lot cooking on the partnership and new technology front. What about their bread and butter? Any tangible wins or progress in their traditional wireless and wireline businesses during Q1?
Yes, definitely. On the wireless side, they mentioned ongoing POCs, proof of concepts, and engagements with multiple domestic and international operators for 4G and 5G radios. So keeping those conversations and trials going, Wireline saw some concrete wins. A BharatNet Phase 3 order from an SI partner system integrator for supplying IP routers in 2 telecom circles. They also supplied GPON equipment for a BharatNet last mile connectivity project in Gujarat. GPON, that's the fiber to the home tech, crucial for broadband rollout.
Right, connecting homes and businesses.
Exactly. And they got run rate orders for DWDM equipment from Tier 1 Indian telcos. That's for 4G, 5G backhaul, basically, increasing capacity on the fiber links connecting cell towers back to the core network. DWDM lets you cram more data down the same fiber.
It sounds like they're also pushing beyond just the big telcos, critical infrastructure you mentioned.
Absolutely. They won tenders in the critical infrastructure sector,
Yeah.
supplying wireline gear to railways, oil and gas, defense. These aren't simple networks. They need to be incredibly reliable. Think about a railway signaling system or pipeline monitoring.
Yeah, mission critical.
For sure. And globally, they got network expansion business from leading international customers in Africa and Europe. And a big showcase moment. The Union Minister of Communications launched their 1.2 TVPs per wavelength coherent DWDM solution at the Bharat Telecom event in 2025. That's terabits per second on a single lightwave, very high capacity. Management stressed how this expanded product portfolio, built up over FY25 and Q1, has really increased our addressable market. It positions them for growth across different segments that are expected to grow globally. The key thing here, I think, is seeing how they're using India's massive build-out as a sort of proving ground to develop products that can compete internationally, not just an India-only play.
That makes sense. Leverage the domestic scale for global ambitions. Any other updates, things like awards, government support, that give a sense of their standing?
Yeah, a few things. Their executive VP, Parag Naik, got the Pandit Deendayal Upadhyaya Telecom Excellence Award. That's significant industry recognition. They were also named Supply Chain Leader of the Year Technology and Electronics, which is, well, pretty relevant given the importance of execution we just discussed.
Especially after the Q1 delays, yeah.
Exactly. And financially significant, they received Rs 122.96 crore as PLI incentives for Q3 FY25. That's the production-linked incentive scheme from the government.
Ah, the PLI scheme. That's direct cash support, isn't it?
It is. It's part of that big push to boost domestic manufacturing in India. So it's a direct financial benefit, plus it shows strong government backing for what they're doing.
Okay, so we've looked at the P&L, the strategy, the orders. Let's shift to the balance sheet. Often tells a deeper story about financial health, right? What stands out there from Q1?
Definitely. The balance sheet really reflects the dynamics of these big projects and future planning. Inventory, first off, it's high. INR 2,537 crore at the end of Q1, up from about 2,367 crore last quarter. Management explained this is mainly to cater to some of the purchase orders that are expected to get executed. Includes doing some advanced inventory action on certain components, likely to avoid delays later, prepping for BSNL and others.
Okay, so in investing ahead of expected work, what about money owed to them? Receivables?
Trade receivables are also quite high, INR 4,453 crore. Management acknowledged this is on the higher side, but there's a key detail. They mention advances of about 1,460 crores that are correspondingly also sitting in the other liabilities, so that offsets some of the impact, net-net.
Ah, okay, so advances received against those receivables.
Exactly, and they confirmed a large part of the receivables number is on account of BSNL 4G project. Collection is linked to certain milestones in that project. They expect a reasonable reduction in receivables over the next couple of quarters, aiming to collect a large part within this financial year.
And cash on hand, borrowings.
Cash position at quarter end was INR 545 crore. Borrowings went up to INR 3,990 crore from 3,269 crore in Q4. That increase, they said, is mainly on account of working capital purposes and for certain CapEx-related investments, funding that inventory buildup and other investments.
Right. And quickly on costs, employee costs dipped slightly in Q1.
Yeah, due to certain provision reversals. But they expect costs to continue to increase going forward. Fits with investing more in R&D and international sales efforts.
So pulling this together, high inventory, high receivables, increased borrowing. It paints a picture of managing large projects, doesn't it? How do they balance that immediate financial pressure with the need to invest for future growth?
That really is the core challenge, isn't it? Managing working capital in this kind of business. The high inventory and receivables, they're a direct result of gearing up for huge orders like BSNL. It shows they're willing to invest upfront, tie up capital to capture that future revenue. Even if it strains cash flow and increases debt in the short term, it's a strategic bet on growth. A necessary one, probably, in this industry.
Okay, let's look forward then. What are the big trends Tejas sees driving their business? How are they positioning themselves for what's next?
Management sounds quite optimistic about the overall market. They see continued investments in fixed and mobile networking technologies worldwide. No surprise there, really, what's driving it. Continuing growth in data consumption. Always more data. Key applications they highlighted include AI data center connectivity. That's huge. Now, the general digitalization of cities and economies, massive investments in broadband connectivity globally, and just a long runway of 4G and 5G deployment globally. 4G isn't dead. 5G is still rolling out.
And specifically for Tejas and FY26, what are their levers for growth?
Their expanded portfolio is key. They listed 5G support, advanced radios, 4G, 5G core network elements, their IPM-PLS router family, the enhanced optical portfolio with 800G and 1.2T DWDM, and FTTX, including XGS-PON, that's a faster version of fiber to the home. Domestically, they're banking on large projects in both private and government sector, like BSNL, obviously, but others too. And those partnerships, NEC, Rakuten, are expected to provide access to global customers and joint go-to-market opportunities. So bottom line from them, bullish about our growth drivers, and they'll keep investing in R&D and sales.
And that commitment to R&D seems real. You mentioned they hold 548 patents now. That speaks volumes about their focus on innovation. Right, so we've covered a lot of ground here, navigated through Tejas Networks Q1 FY26 results, from those initial headline numbers to the strategies underneath and what they see coming next.
Yeah, and what really emerges is that tension, that balance between the short-term picture, delayed orders impacting a quarter, and the long-term game. Positioning strategically in a market like telecom infrastructure, which is growing fast, but also very capital intensive. It's a constant juggling act.
So for you, the listener, maybe the key takeaway is how financial results for one quarter can be heavily skewed by the timing of these huge, lumpy projects.
Hmm.
It's not always a reflection of underlying demand. Meanwhile, those strategic partnerships, the R&D, the product development, that's the foundation being laid, sometimes quietly, for future potential. Which leaves us with a thought to ponder. As the world's appetite for data and connectivity just keeps exploding, what kind of critical dependencies are we building on this infrastructure? And how will companies like Tejas Networks, rooted in India's build-out but with global ambitions, influence digital sovereignty and the shape of international competition in the years ahead?